And of course, that is a story that we'll be following up just to see what are some of the developments that will happen. Now, moving on, the Monetary Policy Committee is set to meet on Wednesday this week to give the country direction on the country's monetary policy. Noah Kipkembo now joins us on an analysis on whether the rates will continue to skyrocket. Now, Noah, good afternoon.
Indeed, good afternoon, Jimmy. With, as you've rightly put it, with the MPC coming up this Wednesday, the question is, will the precedence that has been set in terms of hiking the central bank rate continue? Remember, in the last review, they hiked from 9.5% to 10.5%, 100 basis points. Question is, will that be sustained, or will we see continuous rate hike? And right now I'm joined by Marshall Nyangor, who is an investment analyst. Marshall, quite an interesting environment that we are in. Just recently we saw the Kenya Bankers Association writing to the Monetary Policy Committee, to the central bank, and urging them to maintain the CBR rate at 10.5%. They gave quite a number of reasons. Inflation is quite handled. In fact, the latest inflation numbers we're seeing it dropping to target range now at 7.3%. Is it something, should we be expecting a change come Wednesday or not?
Well, it's difficult because MPC look at several factors when determining the changes. But as you have rightly said, I think we have been seeing in the last few months inflation at least coming down slightly. But as you are aware also, the bill, the finance bill eventually took effect, and with it several costs are rising. The fuel, 60% levy on the fuel. We're also looking at the housing fund, so many deductions. So I think these are some of the factors several sectors are looking at and saying that we need to at least keep the rates not elevated. At 10.5 is not, at least currently, it's not that bad. But if the MPC will increase it even further, there are possibilities of even destabilizing economy because higher rates mean expensive cost of borrowing. Remember, the several players in the economy, the business people, the companies, they depend on the loans to service their for the operation. So the moment these rates are increased by the central bank, the local bank, the lenders absorb the increase and see the signal, and therefore the increases that adjust upwards their lending rates. And if that happens, the cost of business operations even become higher, and the negative impact of that is the slow growth of the economy. So I think these are some of the factors we are looking at. But as you know, the MPC have their own reasons, and they have own reasons to justify the rate hike. Something I might also just need to tell you for a while, because these are just not local factors. We have international factors at play here. We are looking at, for example, the Ukraine-Russia war. Still ongoing, I think, 2 years. We're also looking at what has been happening in the Bank of England and the Fed, the equivalent of the central bank in US. They've been increasing their rates, their own policy rates. And the impact has been very, very significant, affecting us locally. Definitely. So I think these are some of the factors the CBK will be looking at in their MPC sitting. And we don't know the outcome, but we wait to see.
Definitely. I know the major drivers of our inflation, when you talk about food, when you talk about fuel, in the latest numbers, it's sort of, there was a balancing effect, because with the rains that we've had, we've seen the cost of food come a little bit lower, albeit there are elements within the food basket that are still quite expensive. Talk about sugar, talk about maize is still a little bit higher. And it seemed that it sort of balanced off, or sort of equalize the impact of raising VAT on fuel if we go with the latest inflation numbers. In that regard, will this be sustained? The president also saying that we'll be importing more there's the issue of sugar coming in, hopefully to see that in the next month or so, see the cost of sugar come down. Will that be sort of an easier or softer landing for Kenyans?
Yeah, I think if you go back to the reports you're talking about, the Kenya Bank Association report, they're also saying that even the last hike in June has not been fully absorbed by the market, by the economy. And that's also one of the reasons why they're thinking that maybe the rate should just be retained there about. And now the factors you are bringing in, for example, the cost of sugar, the cost of cooking oil, edible oil, the cost of even the energy, talking of electricity, talking of the fuel, the driving, all these ones, we are seeing an increase, an increment that is it's not small, it's actually a significant increment. And these are, as you've said, primary drivers of inflation. So as much as the July numbers were looking a little bit lower, we are anticipating that when we go to August, inflation figures might be higher because all this will be now absorbed into the cost of these particular commodities. We're talking of weather, and I think at some point the weatherman had projected El Nino coming, and we know our economy, weather is a very, very significant factor because we rely on weather-dependent agriculture. And a favorable rainfall, for example, will mean a higher production, and that could at least, we expect that one to minimize our cost of food and food products. But as we talk now, several parts of the country are still experiencing drought. The real impact of the changes in good rainfall have not really been witnessed. So there are so many issues to look at here, and I think these are some of the significant issues that the MPC will be looking at before making those adjustments, because it's usually not just a pronouncement. It has to be underpinned on some macroeconomic and even macroeconomic factors to make those decisions, yes.
And as we finish up, we've been seeing quite a change in global rating agencies. You've seen the Moody's talk about Kenya as a market. And just observing at some, like our Eurobond yields have really been rallying. If last week is anything to go by, the yields on Kenya's Eurobond increased by an average of 39 basis points, with the 2024 maturity rising by 92.7 basis points. And we've seen even in the Ghanaian market, Angolan market, also their bonds are really rallying. What does this tell about the Kenyan economy? Is it restorative sort of confidence, or how should we interpret this?
Surprisingly, a rising yield in the Eurobond, foreign issued bonds, those what we refer as Eurobonds, it's actually a bad sign, surprisingly, because it means that people are willing to dump your bonds at any cost. You know, if you bought a bond at 100 shillings per unit, for example, and you are willing to sell it at 80 shillings, the current yield will show that the bond is yielding very, very high because the new buyers are going to get it at 80 shillings, for example. So the question is, if you bought it at 100 shillings or 95 shillings, you are willing to sell it at 85 shillings, what does that tell you? It tells you that you are no longer confident in that bond. You are no longer confident in government securities issued by a Kenyan government. And as we touched about the Moody's and the Fitch rating, all of them have been downgrading Kenyan economy, and probably showing that there is likelihood that the Kenyan government and the ability to repay their bonds and the loans, they are not very confident with it. They are getting to a bleak situation because initially they were very, very confident that Kenya will be able to service these loans. But as the time goes, we are seeing a situation where the loans are piling up, and big ones, and now the new loans are being onboarded at a very, very high interest rate. I think if we're looking at domestically, a 3-year bond now yielding 16%. That's not very, very good for the government, and not very, very good show for the economy, because it means that you are onboarding new loans at very, very expensively. In other words, your risk premium is very, very high. Lenders believe that your chances of repaying this loan is lower and lower and getting worse. So if you ask me, I think it's not a good sign for the Kenyan economy. We want our yield to be even lower, so that in other words, if somebody bought it at 100 shillings, they are willing to sell it at 105 or 104 shillings, not lower. So it shows you that's really the picture it's painting about our economy. Yes.
Thank you very much, Marshall. I appreciate. Yeah, so that is Marshall Nyangor, an investment analyst, says that there are quite a number of factors that needs to be considered when it comes to coming up with the CBR rate. And the Monetary Policy Committee is meeting on Wednesday, Jimmy. We will see whether they'll maintain that particular CBR at 10.5%. But so far, looking at the telltale signs, looking at the yields of the Eurobond is becoming quite a concern because they are really rallying. But that's the latest in regards to monetary policy in the country. Back to you, Jimmy.
All right, thank you very much, Noah. And of course, that's something that we